So we welcome all of you. So we'll kind of give a few minutes, 1 or 2 minutes, then we'll keep this started. So thank you very, very much to be part of this exciting webinar, whereby we are going to discuss innovating risk protection for a changing climate, and our discussion this morning, afternoon, wherever you're joining us from. We'll be looking at how then we can use this exciting insurance solution in terms of addressing climate risk. So maybe in 1 or 2 minutes, we'll get going. Right. So I again welcome you to this webinar. This webinar is being organized by the Inclusive Insurance Virtual Forum, a team that really looks at how then we can use inclusive insurance as a tool of building or basically closing the protection gap that is quite huge across the continent. Importantly, we are going to look at a very I would say exciting form of risk transfer, which details around the parametric insurance. But how then we are going to lead this is really to make sure that we have a quick presentation just to highlight why this is a very important discussion. Thereafter, I will invite my two able panelists to come in and be able to respond to some of the questions that we have, and also some of the questions that you might be having. Maybe as part of housekeeping, you can drop your question in the chat. And importantly is that we'll be able to really try and respond to your questions as much as possible upon the time that we are going to have that Q&A. Importantly, you just need to click at the Q&A button at the bottom of your screen to enable us have a view and to get these questions to the panelists. The second is that we are going to record this particular session, and the presentation that we are going to make will be made available at the IAA website within a day or so. So thank you very much again for taking your time to join, and we are looking into having this particular conversation. Importantly, also, the views that are going to be displayed or expressed in the presentation, and also in terms of the quick question and answer, are those solely for the authors and the presenters, and do not necessarily reflect the policies or positions of the International Actuarial Association. So as we kind of make effort to respond to your questions, and also the panelists really to discuss some of the key areas that they have expertise on, we want to make sure that they are going to do it with a lot of accuracy and completeness, and doesn't really warrant any regard to or any responsibility to the IAA. So thank you again for taking time to join us. I'll go to the next slide, and this is just to really set base of what we are going to discuss today. Now, before I do that, it will be great really to first and foremost mention the team that will be with us this particular morning, afternoon, wherever you are joining us from. I have Isaac Zambo. He will be able to further introduce himself. He's been working in the space of parametric insurance for quite a long time, and he will be able to speak to us on what he does in more detail as we'll get into the session of the panel. Secondly, also have Agrotosh, who is also an expert within this particular space. We are excited to have these two experts with us. With me also, I have my the vice chair of the Inclusive Insurance Forum by the name of Jeff Blacker. He will also be supporting us as we progress with this particular discussion. Then let's get to it. Let's jump into it. So climate risk has been a major issue, and there are a couple of facts that I want to put on the ground on what are some of the issues that smaller farmers are currently facing. And if we can go to the next slide, you should be able to see that who is basically at risk. 3.6 billion people live in climate vulnerable zones, and that really indicates that we really need to think about how then do we solve their current challenges, how then do we build solutions that will support these people that are highly climate vulnerable. Secondly, 80% of people in the sub-Saharan Africa basically depend on farmland, and importantly, these farms rely on rainfall. So again, rain-fed agriculture is still predominant in many countries across Africa. But also if you kind of move in other continents, you'll be able to see that this becomes a similar practice. Over 1.5 billion people were affected by droughts between 2007 and 2017. And this number is expected to increase because if you look at climate-related disasters such as droughts and floods, they're becoming more prevalent. And that basically means that there is need for us to think about how then we address these particular issues. If we can go to the next slide, we should be able to see that in terms of the losses and the yields, proportionally, you are going to see that the global cereal yields went down between 9 to 12%. That basically means that food insecurity has become a major issue across the globe, and in so many continents, people are going without food. And this is even more when it comes to gendered impact. If you look at the female, a female tend to lose more, around they lose around 8% more in income, particularly on things such as heat waves, and that can basically be equivalated to 37 billion a year in terms of the losses that they experience. And if you look at also income that is lost through floods, 3%, they lose up to at most 3% more compared to their male counterparts, which can be equivalent to 16 billion a year. If you look at then the global losses that are made out of climate disasters, it is estimated between 165 to 210 billion a year loss that comes from climate disasters. And if we kind of increase the temperatures around the world, if we get 2% warmer by 2050, then we are going to get 189 million people more hungry. So that basically means at each and every percentage increase, or in terms of the degrees in temperature, then we get more people basically exposed to food insecurity. If we can go to the next, you should be able to see that in this particular space, then the reason why we want to discuss this is how can we use parametric insurance to support the current ecosystem in terms of the climate play. And one of the key things is that we already know, and we are going to discuss in this particular meeting how parametric insurance can be used to address some of the risks that the world is facing. And we are going to focus on a number of fundamentals. So like design, data quality, what is the real world implication for policy makers, regulators, and other providers within this particular space. Next. Then we have to introduce this topic. And I'll just take a few minutes to introduce what parametric insurance is. Then I'll invite my able panelists to also kind of give us a bit of a background why this is really important. How then can we use it to innovate around climate risk? So as we progress, you'll be able to see that if you can take me to the next slide, you should be able to see that parametric insurance is whereby payouts are based out of an actual occurrence. And this occurrence is used to measure how much payout needs to be made. And this differs from what traditionally other models provide. So in this case, then, when we talk about parametric insurance, payouts will be based on occurrence. It will be based on a particular event, and we use the proxies based on that particular index to determine how much a policyholder is supposed to be compensated. And that's the reason why it differs from our traditional models, whereby loss assessment is not done. There are faster payouts, and also there's issues around transparency and predictability. And if you look at some of the structural challenges within the insurance space, we always talk about issues around claims payouts, issues around transparency. This particular insurance model and insurance product really allows some of these particular challenges to be addressed under its design. Next. The other thing that also we are going to discuss in more details, what are some of the key design elements, and you need to really put this into consideration, because we are going to kind of do a little bit of more discussions around these particular components. Index or parametric insurance depends on triggers, and these triggers are based on a number of indices, and these indices will range from climate indices, and it could be rainfall threshold, it could be seismic activity, because we have different types of parametric insurance. We have those that deals with natural disasters such as earthquakes. There are others that deals with heat. There are others that deals with rainfall. Others that deals with temperature. So there are different indices. And these will be based on, how do we measure what will ensure that customers are paid. The second element that you really also need to put into your mind is what we call thresholds. These will be defined levels that will activate payout. So we will be discussing this in more detail. We also look at issues around different payout structures, because each and every parametric insurance model will have different structures and on how payouts are made. And most of the time, there are pre-agreed amounts that is linked to how serious or how big that particular event or how bigger the impact will be on that particular event. We'll also talk about pricing mechanisms, which will be based on two elements, probability and exposure, and also kind of dive deeper into issues around data. This product is highly driven by data, and it's critical that we look at issues around the accuracy of the data that is built around this. Next. So we also further detail on different activities, the opportunities that we foresee when it comes to parametric insurance. And we've seen a lot of opportunities around agriculture, protecting farmers from climate shocks. We've also seen health indices that really looks at epidemics and how then we can cover different epidemics. We also see a lot of disaster risk financing coming through, whereby we can enable governments and policymakers to rapidly respond to certain elements of need when these particular risks do arise. Above that, there are other limitations, because each and every solution has its own shortcomings and shortfalls. And one of the key things that when you come across parametric insurance, there's need to minimize these limitations. So issues such as basis risk, and we'll be able to talk about it in further detail. It can arise from two areas. It can be an insured basis risk. It can be an insurer's basis risks, depending on how these indices are set, and also depending on the quality of data that is currently being used. Most of the time, you'll get that the actual happening on the ground might not be commensurate to the payout, and that's where basis risks do arise. Secondly, is data availability and quality is always a major issue, really needs to be looked at. And regulatory and affordability challenges that always have been some of key structural challenges that we foresee in this particular sector. Maybe if we can jump on to the next. So why does it matter? Why then are we looking into this discussion at this moment? We need to strengthen resilience for vulnerable populations, and we have practical examples where my panelists will be further detailing what is happening on the ground. We are also looking at unlocking innovative financing for climate adaptation, as we focus on developing tools for climate mitigation. We really look at an opportunity around climate adaptation for the purposes of closing the protection gap, particularly for markets that are really in need of these types of risk transfer solutions. I'll then jump to the next slide. And in this particular moment, I would really want to invite Agrotosh to kind of just bring us to perspective. What are some of the key work streams for parametric insurance? As you do that, Agrotosh, it will be good for you to quickly have an introduction on what you do, and then you can jump straight into it. And thereafter, you can pass it over to Isaac as we progress.
Thanks a lot, Elias. Yeah, so very pleased to be here. My name is Agrotosh Mukherjee. So I'm basically an actuary from the UK Institute of Actuaries. So I started my career in the mainstream actuarial sector, which seems a lifetime away ago. And then the last 14 years or so, I've been specializing in micro insurance and inclusive insurance. And within that, I have been specializing in parametric insurance and agricultural insurance more broadly, and particularly the application of parametric and index insurance in agriculture and also as a tool for development more broadly. So one of the things I learned and this was quite a steep learning curve when I made the jump from the more traditional actuarial work to working in this sector in insurance applied in development, let's say, is that as actuaries, when we are looking at the mainstream insurance sector, we often get quite compartmentalized, and we're just focusing on the numbers and the stuff we do on valuation and pricing and stuff like that, and other purely actuarial things. But essentially, when we are trying to apply insurance in general, and within that also parametric index insurance from a development context, you really have to be involved in much, or there is scope to be involved in many other areas, which is also makes it much more exciting sector to be in. So these are some of the areas that I regularly get involved in, and there's quite a few others as well. So essentially, within parametric insurance, of course, there's a big role that actuarial people or technical people in general have to play, can play in terms of the pricing of the products. A lot of the products, when it comes to the weather index based products, are typically based on satellite data sets, but also data from other sources like weather stations, rainfall gauges, so on and so forth. And one of the things I've learned is data itself, although it is a challenge, it's not the biggest challenge, definitely, because there is a lot of data out there pretty much for every country in the world. The challenge more becomes a case of figuring out which data sets can be used and the accuracy and skill of those data sets. Again, that's an area where actuaries can add value by assessing the quality of the data sets. So there's a lot of work that comes up regarding the pricing of the products, the design, even in drafting the policy wording. I mean, these are typically not actuarial things, some of these functions like policy wording, for example. But again, from a technical perspective, it makes a lot of sense to be involved on some of the areas on even on the drafting of the policy wording or of reinsurance contracts and so on. And then there's lots of operational areas that come up in terms of capacity building. So a lot of the work I do relates to capacity building for insurance companies, as well as other stakeholders, government entities, distribution channels, policymakers, and so on. There is a lot of there are areas of working with regulators which becomes very much relevant, both in terms of building capacity with regulators, with central banks in different countries, which are often responsible for regulating the insurance sector, as well as providing support to insurance companies, for example, to get approval of the product. So typically, when index insurance products, much like other insurance products, are launched in countries, they have to, there's a specific approval that is often involved in terms of getting regulatory approval. So again, as actuaries, we can play a role in those products being approved as per the good practices. Also in terms of reinsurance, so this is again a very key area when it comes to um, parametric insurance, and I'm glad Isaac's on the panel with a reinsurer who can talk to us more about that aspect as well. So yeah, and then there's a number of other purely, I would say, operational areas such as developing training materials, marketing materials, advising on operational modalities, like even things like how the premiums can be paid and claims paid and so on, all of which are, again, typically not something that actuaries typically get involved in the mainstream insurance sector, but those are areas where actuarial people can add a lot of value in the context of parametric insurance applied to development. Also want to highlight one aspect which, just to draw attention to it, that when we say parametric insurance, in this session, definitely, and I guess in the work that all of us are involved in, it's very much about applying parametric from a development context, whereas parametric is also being applied commercially in many parts of the world and many parts of Europe and North America and other countries. It's often used by companies, and it's a kind of a product category that's often applied in the renewable energy sector and the agriculture, tourism sector, and so on, from a more commercial perspective. But in this context, we are looking at it from the perspective of development, which is definitely, has its own challenges. So in the next slide, I just draw attention to some, or just quickly summarize some of the case studies I've seen. So if we move to the next slide, please. Thanks. So these are all case studies which I would sort of cautiously say as relatively successful, because it's very difficult to say when something is really successful or not. But there are quite a few cases. I mean, these are just a few that came up in the recent discussions we had. So these are some cases where we see schemes which have been working, I would say, relatively successfully. And without going into the details of all of them, essentially what we see is, well, mostly the parametric insurance products in the context of development has been applied in the agriculture sector. There are cases where it's also being applied in other sectors like tourism, renewable energy, even for small enterprises, and so on. But it's mostly applied in the agriculture sector. So in the agriculture sector, you often have national schemes in some countries which include some types of parametric or index insurance products. So in the many countries in Asia, in Africa, have national schemes, some of which have been established for a while. Others are coming up more recently or are in currently work in progress. So certainly parametrics have a role to play there. But there are also cases where parametric schemes are going on even outside of national schemes and even without much government support or government premium subsidies. So these are some of those cases, actually. So for example, in Bangladesh, we see that parametric products have been going on for over a decade now without any government subsidies. And they're going on, albeit with its challenges, but there's, fairly large numbers of farmers, hundreds of thousands of farmers being insured on an annual basis, which is still a very small number given the population of Bangladesh. But that's one area where we see good continuity over the last decade. We see cases in Africa where parametric insurance has really led to small-scale farmers actually getting better access to financing, often at lower interest rates than what they would have got from other lenders. So there are some cases we've seen where microfinance institutions or non-profit organizations which are providing financing to farmers or inputs to farmers have continued different forms of parametric insurance, weather-based and yield-based as well, over the last decade almost. And especially over the last 5 years, we see the schemes are fairly good in terms of the trade-off they have in terms of value for money for the farmers, as well as being profitable for the insurers and reinsurers. And all of that is happening without any government premium subsidies. Um, Another example is from Kenya, which is an interesting one, where we see development agencies, in this case, Oxfam, has used parametric insurance as a tool for financing the cost of disaster risk financing. So there's been a case where Oxfam has used a flood index insurance product a couple of years back to actually finance the cost of flood disaster relief financing, and it's been fairly successful. There are some efforts now to scale up that initiative. On the other end of the spectrum, we have also seen schemes where, with good collaboration with government institutions, which have actually led to extremely, poor and vulnerable communities benefiting through linking the parametric schemes like drought index insurance with social cash transfers. So this is particularly something the World Bank has been supporting in Malawi over the last 5 years, and it's reached out now to, I think, over 150,000 households over the last five years. So the idea there being that when there is a specific drought event takes place, as monitored through satellite data sets, then beneficiaries of social cash transfers would receive additional cash transfers because of the drought. So these kind of mechanisms can potentially be a more objective and transparent way of dealing with social protection and of making social protection resilient to climate shocks. And then, of course, in Zambia, so I forgot to mention, I'm based in Zambia usually. So in Zambia, we see quite a few cases where both in collaboration with the government, in particular Ministry of Agriculture, there's been a large scheme that's been going on over the last 7, 8 years now, whereby 1 million farmers receive input subsidies, and they also receive parametric insurance bundled with those input subsidies. So it's probably the single largest scheme in Africa over the last decade. And of course, there's also been quite a few cases, interestingly, with the private sector. With aggregators like microfinance institutions, banks, and agribusinesses, which have again enabled these entities to provide more financing to small-scale farmers and provide markets for small-scale farmers to sell their produce to, and so on. So the reason I'm emphasizing quite a bit on these aggregators is, at the end of the day, for these schemes to be viable, it's really important for an efficient aggregation system to be there, be it with the private sector and or with the public sector. So without a good distribution model, I mean, most of these schemes would never really be viable. Yep. So back to you, Elias.
Right, thanks. Yeah, so I'll want to invite Isaac to take it from here. He will be providing some examples and the work that he has done, and thereafter we'll jump into panel discussion. Isaac?
Thank you very much, Elias, and thank you, Agrutosh, for that elaborate introduction. I'm Zembo Isaac. I work for Zepri PTA Reinsurance. Zepri is a commercial institution, or rather, was established by the COMESA heads of states, if I may put it that way. And we are a fully commercial company, but with a mandate for development, in that our mandate extends beyond traditional reinsurance business, but also does involve us championing inclusion, development, as well as trade within the COMESA region, but also across the African continent and beyond, actually, because we do business not just in the COMESA region, but beyond Africa into other countries and regions. So at ZEPRI, I had the agric department under the public sector and inclusive insurance solutions umbrella within ZEPRI. And essentially, my role is around product development. That's parametric insurance product development. Product that includes design, pricing, as well as distribution. It also includes or involves, reinsurance placement, risk capital mobilization for parametric insurance and schemes that we are currently running. I do have a background in both economics and actuarial science. So just as Agrotosh has put it, on a day-to-day basis, you tend to find yourself doing more than what you bargained for as an actuary, because it actually goes beyond your traditional application of actuarial science. And for a simple reason, because who is better placed to craft marketing marketing materials for a parametric product that has been designed by yourself? It's actually the designer. And when it comes to reinsurance, to drafting of policies and other documents, if you look at most of the structures for these policies, you'll find that you need to explain the product to whosoever is one buying the policy, or if you are passing it on to, in this case, for insurers, to your retrocessionaires, you need to explain the product, and if they have questions, they need to be able to come back to you. So you need to explain that product in the placement slips, if I may borrow that term. So it goes beyond just designing the products, but rather ensuring that we establish proper distribution channels and also provide adequate cover for for these products. As an example, maybe we can go to the next slide. There is one project, and of course we can discuss more in the Q&A section, but just to highlight, there is a project that ZEPRI is implementing. So in this project, ZEPRI is both implementing agent as well as reinsurer, called DRIVE. That's de-risking, inclusion, and value chain enhancement for pastoral communities or economies in the Horn of Africa. It's a project supported by the World Bank and implemented in Kenya, Ethiopia, Somalia, and Djibouti. So for Kenya, Ethiopia, and Somalia, we're implementing a drought index-based livestock insurance product, whereas for Djibouti, we are implementing sovereign cover underwritten by ARC. So what this project does or has done is that it brings together various stakeholders and actually this is a good example of what needs to be put in place for some of these products to be underwritten. Unlike your traditional agri insurance, where it's just you and the commercial farmer, unfortunately, most of the clients or policyholders in parametric insurance, if it's agriculture you're talking about, would be your smallholder farmers. And it never makes sense to approach an individual or to approach smallholder farmers individually because of the rigidities that are involved. There's cost of transportation for the insurer, cost of transportation to verify losses, and also to supervise what the farmer is doing. But with parametric insurance, all those are eliminated. But again, it still requires the presence of an aggregator for you to be able to deliver the services effectively and efficiently. So the Drive project has got two components. Component one is a package of financial services. And this is where we're talking about insurance and savings. And then component two is about trade facilitation and value chain enhancement. This is important because component two is important because it helps us unlock questions around affordability for the pastoralists, because the pastoralists cannot, or a farmer cannot afford insurance if they are not economically active. Yeah, so the key here was to try and unlock economic activity around the pastoralists so that they can afford services such as insurance and other financial services. We'll go to the next slide. So Drive has been in implementation now to 3 years. And in that 3 years, we've managed to open over 412,000 digital accounts for pastoralists. We've managed to collect over $50 million in premiums, and we've managed to secure about 250 million in risk capital. This is your, I mean, sort of your your value at risk. If you look, I mean, if you want to look at it that way, or rather the amount of protection that we've been able to provide. And of course, as I mentioned earlier, draws together quite a huge cross-section of partners in order to make the project work. It's 3 countries, and in each of these 3 countries, we have primary underwriters. We have people supporting distribution and marketing. And then we have reinsurers, local reinsurers, that these are your national reinsurers like Kenya Re, Ethiopia Re. Then we have on the retro panel the likes of Swiss Re, who have also been instrumental in designing the product under Drive. And talking of the product, as I mentioned, the product is an index-based product. The index in this case being NDVI, that's Normalized Difference Vegetation Index. Of course, in this case, you are not providing cover for the animal, but rather providing cover for vegetation availability. So it's a vegetation scarcity that you are providing cover for, and you make payouts based on the availability of pasture as observed via satellite. So in a nutshell, that is what the Drive project is all about. And I'm glad to actually mention that about 56% of the policies of the policy holders on Drive are actually women. And for the first time, we've been able to sell insurance in Somalia to smallholder pastoralists. So those are just some of the successes that the project has done. And you can imagine some of these people, most of these people are holding bank accounts for the first time. And the goal here is to unlock more than just insurance, but also access to savings and credit. Thank you.
Thank you, Isaac, and thank you, Agritosh and Elias. Good morning, everyone. My name is Jeff Blacker, and I am the Vice Chair of IAA's Inclusive Insurance Virtual Forum. And we will now move into some questions and answers. Next slide, please. I see we have a couple of questions that have been submitted. If you have a question for the panelists, please click on the Q&A button on your screen and send us a question. So again, thank you to our panelists. Nice job so far, and I'm sorry I'm about to lob some questions your direction. The first question is, how does parametric insurance limit claim payments to only the amount of economic loss suffered by the individual policyholder? So Isaac or Agritosh, would you like to comment on this question?
I can go.
Thank you, Isaac.
Yeah. You know, when we talk about economic loss suffered by the individual, especially in the face of a drought, for example, the loss of that particular individual usually extends beyond, if it's crop, beyond the field, or the planted crop, or if it's livestock, beyond the value of the animals that they hold. Yeah. And in that sense, it only limits, I mean, claim payout is usually just limited to the insured part of the economic interest that the individual holds. Yeah. So you need to understand that it's a bit hard in this case to quantify the full economic value that these individuals hold, even at the homestead. And as such, in most instances, we tend to limit coverage to only identified or defined assets that have been covered. Thank you.
I would think that also this also can fall under basis risk, right? Where sometimes you have people who have a loss and they're not paid a benefit, or you have people that really did not have an economic loss, but because the parametric trigger was met, they get a payment. Sometimes I think, is it true that that could happen as well? Agritosh, I see that you're on mute. I want to make sure you're aware.
Yeah, sure. No, I mean, well, just on the same question, I think one important thing to is also recognize is, with parametric insurance, I would say it's very difficult to, to get it right at the individual customer level compared to, targeting the experience of the group or the community. So in other words, like the issue of basis risk that you're referring to, where there's a mismatch between the customer's experience on the ground and, the experience on the index, and in particular in terms of whether there's payout or not and the level of the payout. The challenge there remains, I mean, even at the group level, there is a challenge with that, but it's arguably easier to address that at the group level compared to at the individual level. Because bearing in mind that, especially if you're relating this to small scale farmers or micro small enterprises and so on, the areas we're talking about are extremely small, like in terms of land size might be half an acre or even less than that. So often, even if you're using satellite data and so on, you may not get to that kind of high resolution on accurately and also on a cost-effective basis. So often it's more a case of looking at what the overall experience has been at the community level. So I guess it's almost, when you're looking at it from the basis risk perspective, it's more important to address basis risk at the group level, I would say, rather than trying to get it right for every individual customer. The other aspect there is also about what exactly are we trying to ensure. So as in the case study that Isaac highlighted, where we're essentially assets were being insured through the insuring livestock, which are the assets for the farmers involved here in East Africa. So that's certainly one of the options. But the other way of looking at parametric insurance is maybe not to focus so much on the asset part of it or the property damage part of it, as it were, but to look at it as a form of business interruption cover. So, I mean, and there's an example of this came up recently in discussions in the South Pacific that, there is, instead of looking at, say, a cyclone index as a form of asset insurance for damage to a property, it would make more sense to look at the effects of cyclone in terms of loss of business or loss of revenue for the people affected for the few weeks or a month or so. So I think that could be also one way of relating, the product benefits to the individuals, to the impact it has on the individual. Yeah.
Yeah, I think it seems like it would also, if you have areas where trust is low, it does not help when someone's expecting a payout and they don't get a payout. Or that takes us to another topic actually. So either one of you, feel free to jump in. How can insurers and governments build trust for timely, fair payouts, especially in low literacy settings? I mean, I would, from my understanding, there's sometimes uptake of these products can be a challenge, and maybe part of that is built around trust. So how do you build trust, either as an insurer or a government?
Yeah. Again, most of the societies that are targeted for parametric insurance products also exhibit high illiteracy levels. So it's important to understand that for you to be able to distribute these products, for the pastoralist to be able to trust you, or for the farmer to trust you, they need, first of all, to understand the product that you're selling. So marketing or product awareness becomes critical in this case. That's one. And then two, how you distribute the product also matters. For example, we find that when you are distributing most of these products, if I go there as an insurer or reinsurer to say I'm selling so and so product, I can guarantee you that 90% of the time, no one will actually even talk to you. But if you go there with somebody that you know, or somebody that they know and trust, that becomes your icebreaker. I can give you a few practical examples. For example, in Somalia, people thought it was impossible to sell insurance in Somalia. But I can tell you that we've sold more than 100,000 policies, and most of these were first-time buyers. So how do you aggregate farmers in this context, or how do you approach farmers in this context? One, you need the support of government. Two, you need the support of traditional leaders, or what we call, there's a term that we use, we call them climate risk champions, but really these are your village champions. These are individuals who are prominent within society, or society leaders that people trust. So you begin by first educating these people about insurance, and also, through them extending the same training now to the pastoralists. So it's how you deliver the training, how you distribute the product, but also it's also about how you design the products, because it's possible as an actuary to design something so complex that nobody understands, even if it works perfectly or even if it's the best. But if it's too complicated, again, people won't understand it, and if people do not understand it, they will not trust it. They will not buy it, and they will not trust it. So really what we've seen that usually what works the best is simplicity, transparency in how the products are structured and how they are distributed. And also, you need a product that addresses inherent structural rigidities within the rural setting that most of these pastoralists live in. By that, I mean, again, I can give you another example. There's a product that we've started distributing in Zambia called Grain for Premium. And really the reason why we are even talking about Grain for Premium is because we realize that for a farmer to buy insurance, first of all, they have to get their grain, find a buyer. Once they've sold, they need to get on transport, find an insurance company, and then buy insurance. Yeah. But you see, in all these, the farmer is incurring costs just to get to you. So why not attach the purchase of insurance to instances when they actually have cash and they don't need to go out of their way to actually buy insurance? So you cut out the cost associated with, first of all, getting grain, going to sell or distribute their, going to sell their grain to the millers before they can get the cash and come and buy your insurance. The other thing that this does is also answers the question around structuring products that are in line with the cash flows for the farmers. You see, incomes for most of these communities are seasonal. So if you go to this farmer at a time when they are, planting or looking for money to invest in the next season, they're not going to buy that product. So we wanted them to be able to match sales for insurance, even though it's out of season, but to the point within the year that these farmers have money, because it's only at that time that the farmer is able to buy insurance. So you reduce on the inconvenience that comes with accessing your services. So all these things have to be considered if you're going to get the farmer to actually trust and buy your products. I believe there's more to add to this topic, and Agrotosh, I'm sure, has a lot to say about it as well. You're muted, Agrotosh.
Oh, yeah, sorry. Well, I mean, no, just to add briefly that I think on trust, of course, a key area is also about, well, claims being paid out as they are supposed to. So, I mean, as and when they fall due. So, I mean, one of the, value propositions with parametric insurance is about the transparency of the claim payout process and the speed of payouts, which are typically they should be much faster than for the traditional indemnity-based approach, and which is often the case. I mean, I would say more times than not, I do see claims for parametric products, be it weather index based or area yield index based or any other indices, do get paid reasonably quickly. But then, having said that, there are also cases where there are delays or even defaults sometimes due to various reasons, and I think that is where it's a responsibility, of course, of insurers, also reinsurers. Actually, there's many quite well-known reinsurers which sometimes cause delays on claim payments and so on. But I mean, the issue is about, well, from the customer point of view, if claim is going to be defaulted on or even delayed by a few months, it almost negates the point of having the insurance in the first place. So it's really important for claims to be paid as they fall due. And I think this is an area where, of course, the regulators, governments have a responsibility to look at fairly simple areas that can be looked at to ensure that claims are paid on time. So, for example, looking to see how the products are reinsured. There are cases where products are not being properly reinsured, or where the risk is essentially not being covered by anybody. In some cases, that is happening, and that's a problem. Yeah, so there is quite a lot the regulators can do related to that. Also, I mean, in some countries, there are regulations coming into place about time limits within which claims have to be paid. There are these time limits which apply for general insurance overall. I haven't seen many specific regulations related to parametric insurance, but maybe it's time that that's also developed. Because really, like, I'll give an example. In Bangladesh, I think claims have to be paid within 90 days of it being due. Now, is that suitable for parametric? Maybe it should be faster than 90 days, because by 90 days, the farmers have already moved into the second or third season of the year. So what's the point So I think those types of limits can be updated potentially. And also, last but not least, I mean, well, there are many other aspects, but another key one is if the schemes where there are premium subsidies involved, or where, let's say, national schemes where governments are providing premium subsidies, for example, that's a good thing to do overall, from a policy perspective. But often, or in some cases, we see that then there could be challenges with the way the subsidy is being implemented. Maybe there are delays in the subsidy and so on. So I think those are then, that then leads to claims sometimes being delayed or defaulted on. So I think when governments implement these schemes at a national level, there is also a lot of responsibility that they should take up in terms of ensuring that subsidies are paid on time and so on, so that it doesn't end up damaging the reputation of the products and the schemes if claims get delayed because the subsidy hasn't been paid and so on. Yeah.
Yeah, and actually on regulation, just to add, for example, on the Drive project, claims have to be paid within 30 days of being, pronounced or announced by the calculating agent. So, and that's a regulatory requirement by, that was pushed into the policy by the regulators in Kenya, Ethiopia, and Somalia. Yeah.
So I'm having some technical issues on my end. Can you all still hear me? My screen is frozen.
Yeah,
We can hear you.
Okay, then I just won't touch anything on my computer and we'll keep moving forward. So you both recently just touched on a regulation. So should parametric products be regulated differently than indemnity insurance?
Yeah, I would say so. I mean, there are quite a few similarities or areas of overlap, but then there are also quite a few differences. But I mean, I think, well, especially in the context where parametric products are, essentially being applied to, say, small scale farmers, or, micro, small, medium enterprises and so on. So from a more of a development perspective, or even in cases where the policies are being purchased by governments, but they're essentially using it as part of their disaster risk financing and so on, which is happening in quite a few countries. I would say in all those cases, the regulations there are certain differences that should apply in terms of, essentially how regulators are looking at consumer protection aspects, as well as when they're looking at aspects of the the prudential supervision of the such products as well. So on consumer protection, of course, one key area is around basis risk, and how basis risk should be assessed and monitored. I think basis risk will always be there for any form of parametric insurance, but it's a case of being aware of it and of managing it. But then beyond basis risk, I mean, I do see that, a lot of the big challenges we face as a sector is actually not basis risk, but other issues. So I think those are also areas that regulators should be aware of, even because often regulators are not even aware of what those issues are. So I think the regulators should be aware of some of the, issues to do with subsidies, to do with distribution, to do with what kind of data is being used or how the claims process is working, so on and so forth. And then there should be some additional regulations. It's not a case of, let's say, burdening insurers with a lot of regulations and a lot of making it very difficult and discouraging them from entering the sector due to excessive regulation. So we're not, I mean, I'm not recommending excessive regulations, but at the same time, it's important to look at, essentially how the products can be improved from a client perspective. And then also from the insurer's perspective, because there are cases where insurers have entered parametric, have started offering parametric insurance and then stopped because they did not, they might have been exposed to certain risks that they were not aware of, or maybe they didn't reinsure the products properly, and a few other reasons. So it's also important from the regulatory perspective to look at how insurers are actually managing the risks on their side as well. Yeah.
Yeah. And maybe just to add to that, again, I can give you one or two practical examples. For example, one of the things that we needed to, or rather the regulator, I mean, we found regulators asking for in projects that, that have got, because usually parametric insurance projects or products or business has a lot of public interest because you're dealing with the masses in most instances. And so the regulator feels more inclined to step in and protect the smallholder farmers. So one of the things that they do is, for example, they require that all primary underwriters that are participating on a certain or given parametric insurance scheme have their solvency ratios are good, and that they also have a good track record in as far as settling claims on time is concerned. So they would look at two of those things as before they actually even approve a product for anyone. They would actually look at those two things. But also on the reinsurance side, one thing that we did in conjunction with regulators in the region is, you want to make sure that your reinsurance panel is made up of A-rated or well-rated reinsurers, and for a good reason. Because yes, in as much as you're dealing with smallholder farmers, should some of these risks or losses materialize, the losses can easily, get to the hundreds of millions of dollars. So you need reinsurers that will be able to pay as and when, losses occur. And so for that, you then rely on as well for the rating of reinsurers, and also regulators do check that indeed reinsurers that are sitting on a particular panel are well rated.
For everyone who submitted questions, thank you for submitting them. Anything we don't get to, we'll follow up with answers after the webinar is over. Maybe a couple of the answers you guys have already given have prompted so many more questions in my own head. When you're pricing with historical data, how do you adjust what you have in historical data with what you're seeing with climate change, and knowing that the future is not going to play out the same as historical data? For example, you may have historically rainy and dry seasons, but now they're moving across different months and weeks and happening at different times of the year. And when it does rain and when it is dry, it's more severe than in the past. So how do you address these, not only having good data, but good data that's still relevant?
Yeah, maybe I can start on that as well. Well, basically, it's a it's a tricky one, of course. I mean, well, I would say for majority of the parametric products, that I come across, I'm involved in, there's still a lot of reliance on historical data. So I guess one aspect is to also to even for the historical data to, use multiple data sets when we are, talking about historical data, because there are always there can be cases where there are errors in the historical data, or let's say gaps, and or areas that needs to be validated further. So it's always a good idea whenever possible to use multiple sources. But then beyond that, of course, well, and also if you have multiple sources, it's possible to have more accurate understanding of the trends that you see in the historical data. So, I mean, some of the things we have done practically is, often factor in the trends, and so in other words, then when you're looking at your past data, you may not, even if you have 40, 50 years of data, which we often do with satellite data sets, but you might place more relevance or credibility on the last 10 or 20 years rather than going back to what happened in the 80s and 90s. So that's one way of looking at it. Another aspect is to, depending on the country you're looking at, to look at, what kind of, it's a global climate phenomenons or cycles are affecting the weather. So one example is the ENSO oscillation. So basically the ENSO phenomenon, so whether it's going to be a La Nina or an El Nino or a neutral season. Because we know that generally, for example, if it's an El Nino, there's a big risk of drought occurring in parts of Southern Africa and a risk of floods occurring in East Africa. So it's possible to take into account the forecasts that we have of ENSO, and then also to look at what happened in past El Nino and La Nina seasons. That's something which is also being done, and I must say that's also leading to some fairly innovative types of pricing, where in some cases we've even seen premium rates reduce when there is a La Nina forecast, for example, for countries in Southern Africa. So it can also work the other way. It can also work in the favor of premium rates reducing potentially. I would say also more use of more sophisticated forms of stochastic modeling, use of extreme value theories, or like extreme value distributions and so on as well, when you're looking at more of these extreme scenarios. But at the end of the day, again, when we apply this in the context of products which are in the development context, there are also limits to how conservative you can be. I know as actuaries, we often tend to be more comfortable being more conservative, but then that's also a problem if you end up with quite high uncertainty loadings and so on in your pricing. You might end up with products which are so expensive that they're not affordable, or willingness to pay is extremely low. They can't work without subsidies, which may not be there. So I think it's also a case of balancing, the kind of prudence we have in our pricing with products which are viable to start with from a farmer's perspective, or even from the aggregator's perspective. Yeah.
Yeah, thanks, Brutosh. And maybe just to add to that, it's also in the way that you define your unit areas of insurance on the ground. As you may be aware, with index insurance or parametric insurance, you are not covering farmers as individuals, but as a group within a specified parameter or spatial parameter. that you can refer to as a unit area of insurance. So usually these are designed based on homogeneity of climatic experience. But for different products, the requirements are different. Because, for example, for index-based livestock insurance, you would also consider migratory patterns. You also need to consider the spatial resolution of the data that you're dealing with. But most importantly, you need to be able to pair this exercise with ground data or ground truthing, So it's a comparison between actual farmers' experiences versus, your climatic or remote sensing data that you're using for pricing. So a bit of ground truthing as you go and even before you start does go a long way in helping to ensure that the product that you have correlates very well with the farmer's experiences. So delineation of unit areas of insurance is quite important because it does combine both ground truthing as well as analysis of whatever index that you're working with. Yeah.
Just to add one other point there is that one of the things we see is that the diversification of the risk is very key as well. That's the case with any kind of insurance, but also with parametric. So one of the things we've seen is, if I use the example of Zambia, for example, when we first started working in Zambia, which was about 12, 13 years ago, I would say a lot of the work we were doing were in the southern province, which is one of the most drought-prone parts of Zambia. But there's still a lot of farming that goes on there as well. But I think in the last decade, what we see, sorry, due to the high risk of drought that is going on there, it becomes even more important to diversify. So I think now when we look at products in Zambia, we would generally tend to avoid having products in only those in the high risk regions, but we'd also look at schemes which can be spread out in different parts of the country, because even within the same country, there is quite a lot of diversification going on with the different weather patterns. So I think with the effects of climate change, it will become even more important for even local, regional insurers and reinsurers to try and seek this kind of diversification. Maybe a decade ago, it was not that important, but now it's quite crucial. Yeah.
Yeah. And maybe just to quickly add, there's also one way that you can ensure, you can try and improve accuracy in your product design. And one way that we try to do this is also by hybridizing your product design. So you're not just relying on one index or one parametric product, but a combination of different parametric products, so that you are able to capture different aspects of risk. A good example is a combination of weather index insurance with area yield. Of course, area yield for areas. So there is one design approach, I think, that was recently introduced called fail-safe product design. So this is where you are working with your primary product as purely weather index, but because we do recognize that weather index does not do well in certain instances, or in certain geographical areas, you then layer it with an area yield an area yield product, so that you are able to capture losses in those areas where the weather index insurance product does not perform very well. Yeah. At times, it's a combination of different indices. So you could have a precipitation versus temperature, or NDVI with temperature or evapotranspiration and soil moisture, something like that.
Yeah, it goes back to something you said earlier. You balance complexity with accuracy, you know, and simplicity and understandability and trust.
Yeah.
So I'm looking at the clock and I see that we are out of time. I was wondering if Elias is available, if he'd like to add any closing comments. It looks like he's off screen. So maybe I would say that, first of all, thank you to Isaac and Agritosh and Elias for today. And we look forward to future webinars to get more into the technical aspects of parametric insurance and how the pricing is done. I'm sorry we did not get to everyone's Q&A, and part of that was due to me losing the ability to move my screen around without locking up my presentation. So we will find a way to address your questions off after the webinar, and I appreciate you joining. Here on your screen, you have an email address if you want to send any additional technical questions. Thank you, everyone. Have a wonderful day, and we look forward to future webinars with you.